Now, moving on to our next section, we will have a panel discussion. The panel will be discussing the challenges and opportunities in Islamic finance. Moderating today will be Philipp Wackerbeck, a partner at Strategy End. Alongside him, we have James Bagshawe, the Chief Operating Officer at Cobalt Underwriting, Michael Rainey, partner at King & Spalding. Unfortunately, Hussein Hassan will not be able to join us today due to client commitments, but we are very lucky to replace him with Warren Edwards, the CEO of Delphi Risk Management, and David Testa, the CEO of Armila Capital. Philipp, the floor is yours.
Thank you very much. Ladies and gentlemen, good afternoon, and thanks very much for inviting us to this panel discussion. And I discussed with my fellow panelists here that we really like to keep it in, or make it an interactive session. So we'll have a few rounds of questions from my side first, but please, I know it's the session after the break. Please feel free to raise your hands and ask questions, challenge us, and get most of this session for you. Maybe a bit as opposed to my colleague who was the previous speaker here, I'm also a consultant, but maybe not that typical because I don't use slides, but therefore I have panelists and I'm in the favorable position not to have to answer the most demanding questions from your side, and that's why we have this very experienced panel of Islamic finance professionals that you've seen the biographies in the program that was handed out, so I'm not going to go through that in detail, but you can rest assured that these gentlemen here on the panel have a lot of practical experience in the industry, both covering the Middle East, Southeast Asia, and especially here the London market, which is, I guess, very helpful for our discussion. Just a few words of introduction from my side, because I just remembered when I came here that about 10, 12 years ago, I attended my first Islamic finance conference here in London. It was about Islamic insurance, or takaful. There were about 50 or 60 people there. I was doing my PhD at that time. And I guess those 50 or 60 people were about a third of the total Islamic finance or takaful Islamic insurance population at that time. And now it has really grown to a sizable industry. At the same time, Islamic banking was already a bit more advanced 10, 15 years ago, with people like David doing big ticket deals for West LB at that time, if I remember correctly. And but in general, over the last 10, 15 years, for those of you who have followed this a bit, the industry has been growing fastly. It's one of the few industries that has shown constantly double-digit growth rates, something, and still does nowadays, which is very unique in financial services and especially in banking when you look at what is happening elsewhere in the industry. And that's why I believe it's a very interesting topic to not just cover here in this session, but also to think about and to look what the developments are. The industry landscape has changed in the way that a lot of new Islamic financial institutions have been set up, both, of course, in the core markets in the Middle East, but also a few institutions here in the UK with a very specific focus, and we come to that in a second. And in the Middle East, we've also been involved in many of those setups, developing the strategy for those new Islamic banks, which is very, very exciting work. One of the themes, and I think that fits nicely into the overall concept of today, is bridging the gaps and building bridges between London as the most international center for financial services and the Middle East and also Southeast Asian markets, where most of the clients actually domicile. And that's why I think we have a very distinguished panel together to talk about this topic. And let me start with the first question for David, to maybe give us a brief overview on where the Islamic finance industry stands and what the key trends and developments in the market are.
Right, thank you. So for the next 45 minutes, I will be talking about the global expansion of Islamic finance. But more seriously, I think it's been if you look at the last 15 years, it's been a story of unparalleled growth and success. There are challenges, and this panel will no doubt talk about them, but I think it's something that it's very exciting to see. Certainly bridging the gap was a personal motive for me getting involved in Islamic finance in about 2003, when I was working for a big German bank, West LB, that did an awful lot in the Middle East. But when my customers and clients asked me, what do you do about Islamic finance and Sharia-compliant products, it was a bit of a blank. The good news was that West LB was a very responsive bank and encouraged me very much to go out to get to know the Islamic finance community, the Islamic banks, and to develop products which worked certainly in the UK branch environment. And I think that is a very exciting thing for us being here in London, is that the UK government has, as you probably all know, done far more than any other Western government to promote Islamic finance and Sharia-compliant products under the UK legislative system. And so the success that you have seen in the UK is very, very much due to some very forward thinking by people such as Eddie George, the previous Governor of the Bank of England back in 2002, and also credit where it's due to Mr. Unpopular Gordon Brown, who did champion Islamic finance when he was Chancellor. Ed Booz was also involved in that. More widely, of course, I think if you're looking at the GCC into Southeast Asia, there's obviously a tremendous retail drive promoting the expansion of a lot of the activities down there. Certainly, even in the GCC, you'll have seen recent activity in Oman, where again the laws and regulations have been changed to promote Islamic finance, and the first 2 or 3 Islamic banks have now opened their doors for business, which again is very encouraging for those who believe in this sector. And in Southeast Asia, of course, you have a very coherent offering from Malaysia, where I think some of the issues of standardization amongst the scholars' thoughts, which are an issue you will hear as a challenge, have been addressed by the Malaysian authorities in a very coherent and pragmatic fashion. And I think the government there, and Governor Zetti in particular, did deserve all the encouragement that they have and the plaudits they have received over the years to promote Islamic finance as a sector.
Thanks very much, and for keeping it to 4.5 instead of the 45 minutes you promised. But continuing maybe with Mike, based on the work you are doing for various financial institutions, advising them on developing interesting structures and financial products, can you elaborate a bit on the type of business we are seeing at the moment, and maybe an outlook, especially on the institutional side? What are the kind of structures we are using, and what trends are we seeing in the marketplace?
Yeah, sure. So I'm a lawyer for all my faults. I'm a lawyer, and I've been working in this space for 10 years, and predominantly the sort of clients that our firm comes across is these are typically Middle Eastern clients looking to invest. They're looking to invest wealth in Europe and in the US, and historically, going back about 25 years, we were representing clients in the US, and all of their investments were done with equity. So they were turning up with their own money and acquiring assets, and the question was asked, well, have you thought about putting any financing arrangements in place? And the obvious response was, well, we can't, because we can't borrow money. And from there, I guess we've been involved in some developing, being involved with, or working on financing, Sharia-compliant financing arrangements. And I think it's we need to be pretty clear that we are talking about financing, and we are talking about leverage. So, but it's done in a way which is Sharia compliant. So most of our, as I say, most of our clients, and I would say most of the business we're doing here in London, is being driven by our clients. So they will come here, and predominantly they're looking at real estate. So there's a lot of real estate investment, and they will be looking to put in some of their own money, but they'll be looking for someone to finance the balance. And we have used, we've been put financing arrangements in with Islamic banks. So there are 3 or 4 Islamic banks here in London who are providing financing. And we've also got that financing from conventional conventional banks as well. So I would say that, predominantly, and across Europe and the UK, the market has been driven by institutional investors rather than retail. We don't really deal with retail product. We're mainly dealing with either a family office or a fund that's been set up to acquire real estate and is looking to get some financing into that arrangement.
Thanks very much. Retail is actually a good catchword. We've seen a lot of interest from retail investors on the Islamic side in the core markets in the Middle East, and when the discussion is about Islamic finance in Europe, in particular around Islamic banking, in many markets there's the question, what about Islamic retail banking? And typically when we talk about Islamic banking, people first look at retail banking, serving the large Muslim populations in the individual countries with Sharia-compliant financial offerings. But apparently, when we look at the development of the industry, this market didn't really take off fully. And maybe Warren can provide a perspective on the state of the retail banking industry and why it's so difficult in Europe to establish a compelling proposition that has a real business case.
Okay, I'll give you some perspective. I've been involved in this Islamic banking market for quite a while. I started off with a retail bank in the UK with Midland Bank, if some of you remember. It's now part of HSBC. And as a major retail bank, it was responding to customer requests. One particular request came from a Swiss wholesale bank, and they wanted to convert interest into capital gains. So I was going to say 25 years ago, but it's a lot longer than that. This is back in the late 80s. And so we're happy to go along with that, converted interest to capital gain, but because it was off market, we had to have a special interview with the Bank of England, who weren't happy about dealing with off-market rates. But because the whole package was on market, they were happy to do that. And on the back of that, way back in the late 1980s, we looked at retail Islamic banking in the UK for Midland Bank. And the reports would have been very similar over the next, every 5 years beyond that. So big interest, 2.7 million, whatever, Muslims in this country. Do they want Islamic banking? And yay and nay and whatever. And we've had retail Islamic banks in the UK. We've had HSBC, who took over Midland Bank. They launched Armila Islamic Bank, and they've pulled out of the market. We've had the Islamic Bank of Britain, who have had mixed success, and they've got now sound investment. Why haven't they been as successful as hoped for, despite the large number of Muslims in this country, perhaps a larger number of Muslims in, say, France or even Germany? Primarily, retail investors, retail customers are risk aware. There still is some belief, some connection between Islamic banking and the very famous BCCI, going back 15 years ago, whenever that was. So retail customers are risk aware. They want to go for a big brand name. They'll go for an HSBC, Barclays, etc. I'm going to say Royal Bank of Scotland, but that's still a big brand name. So they're very risk aware. They're Muslims, they're Islamically friendly, but they're risk aware. And so that's the UK. So London is primarily a wholesale market, and retail Islamic banking is not as dominant as it was hoped to be.
Warren, do you think there's if you're talking about that, is there any, I mean, in your experience, the product offering that's been offered, would the customer say, well, you're basically doing what a conventional bank is doing anyway, so I'd rather keep with a conventional bank? Is there any evidence of that?
There is evidence, and that's one of the first questions. When people, if they're not going to do it on pure blind faith, faith in terms of trusting what the bank is doing, if they look at the documentation, isn't that converting interest to capital gains is the first question. If that's simply converting interest into capital gains, I'm going to go with a conventional bank. And there's a long a difficult push to say, well, it's very different because it's commodity trading and trade is permitted, but riba is not. They'll say, well, that's not trade. That's a sale and repurchase agreement for those who are sophisticated. Yeah. And they'll say, if that's the case, well, we'll pay the interest, or we'll take the interest if there's nothing better. And I'm taking up a lot of time, so I just want to, in terms of looking ahead, we've heard about, at the last presentation, we talked about social media and Twitter, and at a break, I was talking about Twitter and social media in Kuwait, and that's a big push there. One of the buzz phrases I picked up from the strategy and presentation, was talking about town halls. Now, what happens in a town hall? You've got discussion, you've got conversation, but you've also got a market. So really, in terms of the future for Islamic banking, is looking at the past. And looking at the past, looking at mutuality, recreate the town hall where you have conversation, people are talking about conversation, try and mix between Amazon Local, Groupon, crowdsourcing. How many of you are LBS alumni? A handful, and we've all had regular phone calls from the alumni office looking for money. In terms of, that's why there's free membership, because we're on the list. So yeah, that's crowdfunding. That's crowdfunding. So if a bank has access, banks have information. They know what people are buying, what people are selling. They're in the town hall, so they can get the conversation, and they've got assets and liabilities. They've got buy-side people, sell-side people. Put that all together and create a town hall of Islamic finance.
Thanks very much. Yeah, that reminds me of the time. It was 5 or 6 years ago when we did the strategy for a new Islamic bank in Kuwait. And given that all the consultants were already quite seasoned compared to the generation X or Y that was the target group for the Gen Y offering, we decided to invite a couple of focus groups made up of students to design the new offering for a new Islamic bank for young people, to tell us what kind of products and services these people are looking for and how should we design the bank. And we were, at that time, after all the focus groups we did and all the work we spent, we were quite disappointed, because the two things people were telling us at that time were valet parking, and FC Barcelona customized credit cards. But I'm sure that has changed over time, and Islamic banking offerings for the retail side get more sophisticated in terms of technology application nowadays. But giving James the opportunity to talk a bit about his industry, I would say, because James, we've met a couple of years ago when James was still a banker, but already at that time had a passion, like myself, for the insurance industry, and particularly there for the Islamic insurance or takaful industry. And James is, I think, now engaged in a very interesting company, and he clearly differentiates between apparently what the London market has to offer for insurance and what the UK retail market would be looking for. But it, I think, would be worth to describe a bit how you see the development here and why it's particularly important for the development of the Islamic insurance industry, what you're doing here at the moment.
Well, if I can give a bigger background to Cobalt, Mike touched on it, that Islamic finance, one of its principles or tenets is to have an asset, and Mike worked on large real estate assets. Up until now, all those assets are insured in a conventional way. The large risks of the world are basically brought to London for pricing and bringing onto the balance sheets by the big insurers, and including Lloyd's itself. Insurance is split into three. So you have this, what we call personal lines, so that's motor vehicles and people's houses and small businesses, and they are sort of country centric. Then you have the large life and pensions market, which I think most of us will touch once in our lives. it's not very developed in the Islamic world, but as the population increases, that's going to be a massive market. So that, again, is kind of country-specific, but with large institutions. What we are is a London market player. So all the world's large airports, oil refineries, big property, wherever it may be, is brought to London. Large catastrophe risk of the United States is brought to London. So Hurricane Charlie or whatever comes into the London market. And the reason of that is that the risk itself is so large that if the San Andreas fault happens, then the United States is going to be hit not only by a massive economic event, but also the rebuilding costs. So what it says is we must come out into another market and get money if there's an event which comes back into the US. And that applies to every country in the world. So Cobalt has been set up to be as part of the London insurance market. We're not part of the UK market. We don't do retail personal lines. We do large risks out of the Middle East and Asia. And there's an awful lot of risk in the Middle East. And what we are doing is taking that risk and taking the premium and hopefully taking some of that money back into the Islamic finance world to develop. So it's kind of like a circle. And at the moment, that circle is broken.
Okay, thanks. So having heard that there's less of an affinity for the retail markets and much more on the institutional side, and I think there's a lot of value add the London market can offer, both on the insurance but also on the banking side. Maybe a question for David and Mike also. What really drives people to come to London? What are the kind of products that are developed in the market? What are investors looking for? What are the most recent trends? What will happen over the next 2 or 3 years here? Where can the money be made on the institutional side?
Sure. Speaking just specifically about my own case, I mean, I'm running now a company called Armila Capital, which is effectively a family office for a Q80 high net worth investor. And perhaps his tale is typical. He looks around the world, he doesn't know the US, and I think that's a separate category. He looks at Europe, he's concerned about the Eurozone. He looks at Asia, perhaps it's too risky. And this is a common thread. This is why London and the UK has had so much foreign money coming into it over the last 3 years in particular, but it's always been a trend. It's always there. I think what we're seeing with, again, let's take my particular investor in mind. He's a young Q80 and he wants to do things in a Sharia compliant way. So Armila Capital has been set up to be a Sharia compliant investment advisory firm. And I think you're tapping into a lot of opportunity there. You see great products being offered by other banks, such as Bank of London in the Middle East. We have my old bank, Gatehouse Bank, still very strong in commercial property. And that's a very strong theme in one part of what London has to offer. I think property is extremely popular and always will be. Other products, I think, have struggled to take off the ground on the wealth management side in the same scale. I think people are struggling perhaps to differentiate between non-Sharia and Sharia-compliant equity products and what the performances are like. I think if you go back to, say, 2010, Sharia-compliant equity funds were perhaps really overperforming because they couldn't have any conventional banks in them. So, of course, you got rid of one whole basket case of mess, and you were doing very well, and the performance was very good. Perhaps some of those banks are now doing better, and perhaps those funds are not performing as well on a peer-to-peer comparison as they used to. But again, the other side of the coin is the innovation of London, and I think I'm also a director of Cobalt as well. So James and I work together at Gatehouse, and now we're working together at Cobalt. And Cobalt is a genuinely innovative thing which comes out of London per se, and it taps into, as James says, the fact that in London there is this unique thing called Lloyd's and the London insurance market. So those are the real strengths of London, what London has to offer. And I'll let Mike talk about the other thing, but clearly the legal and accounting expertise that resides in London, in particular in the city, is a huge reason for people to come here to make sure their products are structured appropriately.
Yeah, no, I think that's right. I mean, now again, just based on my experience, London is is the financial capital of the world. So, if we're talking about Islamic finance, it's another form of financing, and given the the policies of, you know, this government, this country, it's not surprising that, you know, they want to embrace that. I mean, ultimately it's about, you know, I don't know that necessarily the government's doing it because they, you know, they're feeling generous or, you know, they're a charity. I mean, they're doing it because it's, you know, it creates jobs, it creates wealth, and it's a market that they want to be part of. It's growing. And, you know, insofar as, you know, talking about, you know, the takaful or the, you know, Sharia compliant insurance, you know, London is the home of insurance. So again, it makes sense for, you know, if we're talking about, you know, trying to develop that, you know, London is the place to come. Insofar as, you know, how I see it sort of panning out over the next few years, I mean, again, my experience, because, you know, I'm seeing really liquidity in the Middle East, you know, trying to find a home. A lot of that is being reinvested in the Middle East, but of course not all of it. When it's coming to the UK, it could be coming directly through a family office or through a government organisation or a company or a fund that's set up in the Middle East that raises money looking to invest. It could be through a bank. So if you look at a number of the Islamic banks that are set up here, you know, if you look at their shareholding, most of those shareholdings sort of trace back to the Middle East. So, and, you know, so what is driving Islamic finance? Well, it's, you know, it's my clients who are coming here, and you know, they could acquire assets with, you know, just with their own money, but no, they want to put some financing in place as well, and they say, well, how do I go about doing that? And there are, you know, some banks are offering the products, and I think it's, you know, when we sort of talk about the Islamic finance market, it's, you know, it's one of the themes that sort of crops up a lot is, you know, is what you're doing, you know, essentially the equivalent of what a bank is doing, which is effectively lending money and charging interest by a different name. Well, there's definitely an element of that, but I think, you know, it is a different system, and the big difference being, you know, it's sort of, as I've heard someone else describe it, you know, it's kind of like old-fashioned banking. You know, all the sort of flash gimmicky products, the derivatives and the put and call and securitization. I mean, while there sort of are equivalents of it, I mean, basically we are still talking about, you know, real assets, and, you know, not moving too far away from that. So, you know, rather than saying it's a completely different form of, you know, financing, and we're not providing financing in the sense of a bank, I think it's better to say, well, it's a much more conservative form of banking, because the banks here, the Islamic banks here in London, if you take BLME as an example, if you go onto their website, you know, they are actually offering a retail deposit product. It's under a wakala. That money comes in, so they're effectively taking in deposits, and they are using that money to, you know, provide financing for all sorts of things, including real estate, including commercial, you know, commercial financing to, you know, commercial organisations. Not all, you know, some of them have nothing to do with, you know, they're not Sharia compliant, but they, you know, they like the offering. Yeah, but it's, from my perspective, a lot of this has been driven, you know, from Middle Eastern clients who are coming here and saying, look, you know, we want to put in place a Sharia compliant financing arrangement.
If I could segue on that, and really, Islamic banking is not something completely distinct from conventional banking. Islamic banking is but a special case, because it's old-fashioned banking, it's merchant banking, it's trade finance, which is the basic core. It's trade is permitted, but riba is not, is the basic tenet of the whole thing. And it's fund management, it's advisory services, it's leasing, it's project management, project finance. This is all traditional conventional banking, and it's just but a specific case, because everything in conventional banking is permitted, and so everything within that's called Islamic or halal is therefore part of conventional banking, because there's nothing that you could possibly see in an Islamic environment that's not permitted conventionally.
Yeah, it actually touches on a very important point, and thanks for raising that. There's, from my perspective, and happy to get your thoughts, there's kind of a theoretic ideal Islamic banking, that is often described, and there was a lot of positive press coverage over, especially during the times of the financial crisis, at the peak of the crisis, how Islamic finance makes, or why it's more resilient than the conventional world, and all these positive connotations that are given to Islamic finance. But to play a bit of a devil's advocate, there's also the practical reality of Islamic finance that is not always 100% in line with the theoretic ideal of a full profit and loss sharing, risk and reward and everything. Critics say there's a lot of copycat solutions. We'll just take the conventional product as a benchmark and convert it into a green product, into a Sharia compliant solution. There's a lot of financial engineering behind it, but at the end it's the same, and the true benefits of Islamic finance are not really visible in the effective products that are sold out there. Can you, and maybe Warren continue with that, elaborate a bit on that and tell us about your views on how Islamic is the Islamic finance industry really? How Islamic does it need to be in order to find a market? And potentially also, if I may add a third one on top, what are the key challenges for the industry to better capitalize on the structural differences it has to gain some competitive advantage vis-a-vis conventional solutions? It's quite a long question, many aspects, but maybe give it a go.
I'll give it a go. In fact, as I said, I've been involved in Islamic finance banking for some years, 25 plus years. But just 4 years ago, I thought it's about time I learned something about Islam. So I went along for a course on Islam. And within the first hour of that 3-day course, somebody mentioned, the teacher mentioned Hadith 1. And what does that say? Can't remember the name. And basically, talked about niyyah. And niyyah is about intention. And in all those 25 years of me being in Islamic finance, nobody's ever mentioned niyyah. And so it's going back to first principles, what's the point of it all? We're doing I'm going to call it a repo agreement, but you could call it a murabaha, because a murabaha is not just a two-way sale and repurchase agreement, it's 3-way or 4-way or 5-way, depending on the name of your scholar. But essentially, we've got a few arrows and dotted arrows, but it's a repo. Okay? But back to niyyah, it's the intention. So when we go for our final viva in the sky, we're going to be asked, what do you know about trading steel? What do you know about trading coffee? Not a lot, but you spent the last 20 years trading steel, and but really that's trading interest. So you've got to go back to first principles and say, what's the niyyah, what's the intention of it all? If the intention is to invest in treasury bills or commercial paper, receiving interest, but you're pretending that you're trading in commodities, well, that's the intention, and you know yourself what you've been doing.
I think we need to differentiate a little bit. I think in every conference on Islamic finance that you go to, you always focus on the difficult stuff, and that is the debt equivalent products in Sharia compliant finance. There's a lot of stuff in equity fields, which is much easier. Equity is easy for Islamic finance, okay? So when we talk about these challenges, it's always about the difficult bit. And there are, the Sharia compliant equivalent debt products are difficult. I think there are challenges there, but I think banks are set up in Islamic, if we're talking about Islamic banks in particular, that they live in a world of leverage. You cannot impose an equity model on banks. For a start, your investor base won't accept equity returns going to banks. They like the equity return to be enhanced by a bit of leverage, thank you very much. So banks are forced down that path, and Islamic banks are forced down that same path as well. So I think that has to be acknowledged in facing the challenges. I think another big challenge that Islamic banks face is the regulatory one. And certainly from a capital weighting perspective, and to illustrate my example, certain wakala products carry 4 times the capital weighting of an equivalent debt product, conventional debt product. So there is an inbuilt challenge for Islamic banks to do some of their more risk-sharing equity products. So I think in defence of Islamic bankers, I would make that point.
Yeah, very valid point.
It's
that's a byproduct of it being banking rather than merchant banking.
Absolutely.
But just, I mean, if you're talking about, it all depends what you're talking about. I mean, James, you can perhaps just elaborate a bit on your, you know, on the product that you're offering and what it does, you know, what distinguishes it from a, you know, typical insurance company where I, you know, pay my premium to an insurance company and I pay premium, and then when I go to make a claim, they say, sorry, in the small print, it says, you know, that's excluded. And I never, and every year my premium goes up. I don't seem to ever see any reduction or rebate for, you know, for not making a claim. And I think it's a good example of where, you know, you can show something distinguishing with what you're doing.
Yeah, in Islamic, what I would call Islamic or Sharia compliant commercial insurance, like the big stuff, actually the London market is incredibly Sharia compliant. The whole basis of Lloyd's was a very mutual creation where the misfortune of one was paid for by the good fortune of the many. So in 1670 or whatever time Lloyd's was set up by the merchants, everyone put their money into a pot and just said, well, whoever suffers a misfortune, they should be remunerated from the pot out of a contribution. That whole basis has continued today. So it's very Sharia compliant. What makes us in the insurance world different is basically under two principles. One is the principle of participation. So as Mike was saying, the policyholder in a conventional world, he pays his premium, and if he claims, he gets his money. Well, in the Islamic version, you pay your premium and you get your money on a claim, but you also have an interest in the profitability of the pot. So you get a no claims bonus if there's a profit. And that happens in the mutuals around the United States, France, the UK. NFU Mutual in the UK, for instance, will pay you a rebate. So that is a good thing. You know, that's better than the conventional. And the second one we've touched on is the premia themselves. When they go into a pot, they have to be invested in a Sharia compliant product. And that Sharia compliant product has to be produced by the Islamic financial institutions.
And I think that the point made by David too about these debt-based products that we have, that, you know, if you're talking about a bank, it is, you know, effectively, you know, bridging the gap between someone who wants to, you know, put in money short term with someone who needs, you know, money long term. And they are, you know, those sort of instruments that are in place, you know, they are looking fairly similar to a conventional bank. And I think, you know, everyone knows that. But that's, you know, that's just part of what Islamic finance is about, because, you know, we're talking about investment as well. And a lot of investment is done without leverage, investment in funds which are investing in equities, you know, big part of the Sharia compliant investment world. So we need to look at that too. Insurance is another one. But certainly when it comes to, you know, what I do, and you know, a client is looking for financing, I mean, that's, you know, that's what it's getting. It's entering into, you know, a debt-based instrument, and it's structured in a different way, but ultimately, you know, that we get back to looking like a product that's very similar to a conventional bank.
Yeah, but there's nothing wrong with debt-based instruments because you've got Murabaha, and that's a big growth opportunity, because if you go into Tesco's and look at halal chicken, and that's from Brazil. So I don't know if the producers have, we've got the World Cup coming up, so Brazil is going to be up there.
Yeah, one of the main sponsors is just a chicken company. I'm not sure if it's halal, but it's a chicken company. Just saying.
Is it?
Yeah,
It probably is.
Well, it's a chicken company in
BBC's Radio 5 Live told me.
Blackburn. Again, I've talked to, my wife is Spanish, so my home language is Spanish. So I talk to people in Madrid, and they listen to me about Islamic finance, but what's in it for them? What's in it for them is that Spain produces agriculture, a lot of South America produces agriculture and farm animals, which are exported in a halal manner to the Middle East. So trade finance is pretty much a core. It could be debt-based, but it's core to Islamic finance. And SMEs are looking for finance. SMEs produce things. Focusing on SMEs, we've got, we can have local supply chain finance or international supply chain finance. And that needs very simple, no flow diagrams required, basic murabaha, which is trade finance. And looking back at my own experience, when I first started commercial paper and bankers' acceptances, you had to identify the underlying commodity, underlying trade. It's no longer required, but back 20, 30 years ago, you had to identify the underlying commodity, underlying trade that you were importing.
But just, I mean, for those who don't know what murabaha is, it's, I mean, just going back to international trade, if Warren wants to be the financial intermediary, James is the end customer, I'm the seller of the product. Effectively what happens is that, you know, Warren buys the product off me, say for £1 million, and then he on-sells it to James for £1 million plus a profit. And James gets 2 months to pay for that. So that's where the financing arrangement comes in, and the profit is, you know, Warren's he's bought the product off me, he's taken title to it, he on-sells it, he's charging a profit on the on-sale.
Yeah, in terms of cash flow, it's not so different from a banker's acceptance.
Yeah.
Or commercial paper in terms of cash flow.
Yeah, and I mean, New Zealand is the same. It's a huge exporter of dairy products, and it also of products to the Middle East. They send a lot of live sheep to the Middle East, and you know, that's exactly the sort of thing. You have these huge trade flows, and exactly the sort of place where Islamic finance comes in.
Having said that, and one of the key tasks of the moderator is to also have two things in mind. One is the clock, and second is to look for questions. And I see that the gentleman over there has actively raised his hands for quite some time. So
about this particular subject, trade finance, have you seen any Islamic bank who has opened LC for the importer, and when the importer lost money, they repaid him back?
On LCs, I think.
Yeah.
Letters of credit.
No, I haven't.
What difference between the conventional and Islamic?
What's the difference? Well, I mean, I think we've already mentioned this, particularly on the debt-based products. You know, maybe there's not a lot of, there's obviously a difference in the way that the transaction is structured. They are completely different, but the economics quite often are very, very similar. Now, the only difference really that I see, particularly when I'm dealing with an Islamic bank, is, you know, they're probably more prepared to enter into a discussion, they're prepared to renegotiate, they're prepared to extend time for repayment. But ultimately, you know, once you've entered into an arrangement with an Islamic bank, the end result is that the customer owes the bank money. And more often than not, the customer has provided some form of security for that obligation. Now, you know, to create that debt, different structures, but ultimately that's where you end up, the economics of it. And as I say, the more substantive difference is that, you know, as I say, the banks are they're probably more prepared to discuss.
If I could add to that.
The key thing, can I have 1 point? The key
Murabaha,
thing,
you are supposed to share the loss and the profit.
well, the key thing there is the bank owns whatever it is. For a moment in time, the bank is legal owner of the asset that's in trade, and the conventional banks don't do that. So that does encourage things like getting to know your client better, understanding the mechanics of the trade, which I think goes back to the point about old-fashioned banking and merchant banking. I think that's a good thing. It's slow, it's frustrating, and that's why perhaps a lot of the big conventional banks, like HSBC, have flirted with Islamic finance and withdrawn, because on the big deals, on the capital market side, they don't get the flow. They don't get the flow of business, because everything is bespoke, everything's tailor-made, and everything takes a little bit longer. And so I think that's a good thing, but it's not for everybody.
Yeah, can I just add to that? On Murabaha, the big difference between Murabaha and general lending, mechanically it looks the same, but the big difference in terms of Islamic Murabaha is that there is an underlying trade. Now, of course, occasionally or often it gets abused, and the underlying trade is, shall we say, slightly manufactured. But in terms of trade finance, we actually talk, if we're talking about chickens, or we're talking about orange juice or sheep, we've got an underlying business case there, and the trade is being financed. There's no lending on overnight, on overdraft or whatever, without reference to a particular international local trade transaction. And that's the big difference. It's looking at the underlying business rather than lending someone to go off and invest on the horses.
Okay. We have another question here, and
yes.
then the gentleman behind you.
Yeah, my question, don't you notice there is a kind of equality between the interest rate, the traditional interest rate and the traditional banking, and between the murabaha, which is, if the interest rate is high, let's say a 3-month rate, we will find the murabaha is equal in a way to the 3-month rate. If it's less, we will find the murabaha is in a less way with the going interest rate in the traditional market. So I don't know, I see that there is a lot of indirectly called murabaha, but there is a lot of similarity with the traditional interest rate. Thank you.
You want to leave that as a comment or direct it as a question to somebody to... I'm sure Warren is happy to take it and has a view on it.
I'm happy to bounce that back. Yeah, we've got, this is water, and it's 0.5 liters. Now, it could be vodka, 0.5 liters. So the measurement is neither here nor there. It depends on what the thing is and what actually is going on. What's the niyyah? So whether or not a murabaha transaction or a sukuk transaction is based on 3-month LIBOR or not is not really important. It's the underlying transaction. Is there something underlying going on, or is it just pure financing? So the measurement is, because in terms of 3-month LIBOR, and if we go back to our undergraduate days in economics, it's a function of interest rates and economics and whatever. So the end answer is going to be the same. So even if you have some other, people are talking about Islamic indices for financing. If you have an Islamic index for financing, you're going to get investment bankers doing basis swaps between the Islamic investment yield and 3-month LIBOR. And so it's all going to come back to the market rate of yield, if you like, or rate of interest, rate of yield, rate of return.
Return on risk. Because I think the one thing element that conventional and Islamic does have in common, there is a return on your risk. And to be honest, the Islamic bank deserves more of a return because it's taking more of a risk, because for that moment in time, it owns that asset.
But you know, Islamic bank, if you default, like if I agree with the Islamic bank, like I will repay in 3 months' time, and if I don't repay, they will not charge me any interest.
They can't charge late interest,
Yeah,
that's correct.
that's
They can only recover actual
Yes.
costs in enforcing their claim.
Do you see that in Islamic finance, people are coming because of Islamic feeling or religion-wise, or is it for them it's more convenient than the traditional banking? Thank you.
Well, I think I go back to my opening comment. I think in the Muslim world, it is the retail market that is driving the expansion of Islamic banks, without a doubt. I think in the London market, you've got more wealth management, investment banking, and capital markets where things are being done for perhaps slightly different reasons. But generally, people say 10% of Muslims want to invest in Sharia compliance, full stop. 80% don't mind if the returns are the same, and 10% are complete skeptics on Islamic finance. So that's the universe of investors that you're always talking about.
Which is actually very interesting, because just one final comment, and then we get back to your questions, is because when you look at the demand for Islamic banking, no matter what country you look at, you have exactly this segmentations. You have the ones that prefer Islamic only, you have the ones that prefer conventional only and would never consider Islamic, and you have the huge group in the middle. And you can divide this into 2 pieces. One is the one where it says, I slightly prefer Islamic, but it needs to be competitive. And you have the ones that say, I don't care, best proposition wins. And that's why it's very important what we experience in our work for many Islamic banks, that there's no unique positioning and there's no guarantee to be profitable and make business just because you are Islamic. A, because there are too many other Islamic banks nowadays. B, nobody will pay you a premium. And C, you have to be competitive in order to attract clients, because the group of clients that would just go to you because you are Islamic is too small, yeah, and it's not sufficient for everyone. And that is why I think what we always encourage Islamic banks in the discussions we have, in the projects we do, that they need to find a way that is also appreciated by their clients, yeah, and not just by their Sharia board or by officially what the public says about Islamic banks. So Sorry for taking time, but now the floor is yours.
So my question would be about the financing in Islamic finance. So I can see how it might be feasible for some people to take project finance in an Islamic way, but if we look at the traditional, the short-term facilities and the revolver, there's, in my point of view, there's still no way that the Islamic would be more feasible than the traditional, given that it's a murabaha. So if I want a short-term credit facility or a revolver that I want to tap on whenever, it couldn't be the case in an Islamic because I would already pay in advance the profit. So how could this be tackled going forward? If, like, strictly from a corporate point of view, how could this be tackled? So yeah, mostly to Warren and Michael, the questions.
Well, I think short-term financing is always difficult, and I think a lot of banks will resort to the commodity murabaha product, which is there for that. It is flexible. It was developed as initially for treasuries to use, interbank treasuries to use, but it's become much wider because it is accepted by scholars out of necessity, and that is clearly a very easy thing for it to be used for. Because, as I said, to structure a sukuk, a 10-year sukuk takes months. It takes longer than a conventional bond issue. You can ring up your guy at JP Morgan and get 2 billion euros in 30 seconds. You spend 6 months on a $100 million sukuk. And again, I see value in that, but it's not for everybody. But short-term financing, yeah, sure. Out of necessity, I think at the moment, it will be a murabaha 9 times out of 10, commodity murabaha.
And I think, if we're talking about Islamic finance in the UK at the moment, I think, probably 90% of it, 99% of it, if you like, is through murabaha, commodity murabaha financing. The other ways in which you can finance, of course, is if you're where the bank actually owns the property. So the bank buys the property, owns it on its balance sheet or through an SPV, and with its customer enters into a leasing arrangement where it basically leases the property to the client who pays rental income to the bank, and over time you can buy the bank's ownership. But of course, banks owning property is not something that you'll find much in Western, UK and the rest of Europe. So this murabaha financing is very common.
Also problems if a bank is buying a motor car and selling it on through an Islamic scheme to a customer, then the bank has got to be providing the guarantees of the motor car and getting insurance for perhaps.
Well, in insurance, just to pick up on the insurance side, obviously any asset you have has to be insured, and on that insurance policy has to be who the proceeds of any claim would go to. So the advantage, if you like, of having Sharia-compliant insurance is to actually clarify who owns the asset and what is the asset backing. And there's, I'm sure everyone's fully aware, there's a great debate going on with sukuks about what is the asset, how is it owned by the sukuk holders and everything else. And because these are large commercial assets, they do have to be insured. And it has to be absolutely clear who owns that and who gets the money in the event of a claim. So the insurance industry can help resolve the issue of ownership and identification of asset.
Yeah. I've seen a few other hands. I'm not sure. Yeah.
Sorry, my question isn't on murabaha, but so I wanted to ask, the British government announced last year the institution of Islamic bonds for the first time ever. How can this change the game rules, and what do you think other Western markets, will they follow or not?
Yeah. I think before answering that, we need to introduce a kind of an expert panel chat on murabaha after this panel, because I think murabaha raises quite some interest among the audience. But quick answer on that one, if anyone feels.
Well, I think the UK government's been talking about issuing a sukuk for about a decade, and we were talking about this before we came in. Yes, the government said they're going to do it. They said it at the World Islamic Economic Forum last year. Legislation has just been passed to enable the government to do that, but we're all a bit sceptical whether they will actually do it. There's an election next May, and whether or not the government's got the stomach to do it, I don't know.
And there was an election last week for the European election. So there's certainly intention. There's a wish to issue a sukuk, and it's been slipping a little bit. The current projection is third quarter. Yeah, third quarter, probably fourth quarter more likely. But there's also the political concern. What would the Daily Mail say if there's a sukuk issued? And that's the answer. People can probably guess what the Daily Mail will say.
Yeah, but I think it would be a very good thing for the government to do it, and I think it would be a successful thing. And I think once other governments saw it, they would probably follow suit, because it would make a difference.
Okay. I guess we have time for one final question. So the most active hand raiser, or if you want, please feel free. But
it's not a question. It's just a comment. Since I heard some of you are in the insurance business, my firm took about 15 insurance companies in Saudi Arabia public, and you know, in Saudi Arabia, the insurance market is all Islam Sharia compliant. Yeah. And after 7 years of these companies going public, the market has gone through major restructuring, and now the government is going to reduce these numbers. There are about 35 public companies in Saudi Arabia. It will go through major consolidation, and they are inviting international companies, especially in Europe, insurance companies, to come to the Saudi market and basically pick some of these companies and go to the public market immediately. So it is a great opportunity for those who are advising insurance companies or are involved in insurance companies.
Can I just say one thing on that? One of the principles of London is to help insurance develop in countries around the world. It's to everyone's benefit. And we talk about London insuring things, but what it also does is reinsure, which is back local companies with large capacity to take risks so they can unload it into London. And that's one of our bridges, if you like, for the Islamic world, is to help Islamic insurance companies in local markets be able to compete against conventionals with Sharia compliant capacity on equal terms.
Okay, thank you very much. Maybe we didn't stop with the last question, but a very good comment. So there's a lot of opportunity. It's noted. Yeah, we'll reach out to our clients. I would like to, first of all, thank my panelists. It was a very good and lively discussion. Much appreciated. But I'm also quite impressed with the audience. I think nobody really fell asleep, and there were a couple of good questions and discussions, and I'm sure the topic of Islamic finance is interesting enough for all of us to pursue opportunities here, and there's a lot of opportunity. So hopefully LBS will be in a position to establish something to further promote the growth of the industry. And yeah, thanks very much from all our panelists, also to the audience and the organizers.